In the early stages, you might think, well, big deal. He's bragging. I'm not bragging. I don't need to brag. I'm really good at this. I don't need to brag about it. I've lived it. What I'm teaching you to do is screenshot it like I'm showing you. So that way you can save these moments in your journal, because we've talked about very specific price levels. I'm not ambiguous. I'm not saying up and down. I'm taking your attention to right to a specific level, not a zone. Because if you don't understand what it's going to gravitate towards, you have no chance in being consistent. You'll be like the people out there on YouTube that are starting their live streams at $4,800 and shitting themselves all day long, thinking they're smart. You can't do those types of things. You can't. You have to go in, look for specific things to repeat. How do you know that they're going to repeat? By screenshotting them. Screenshot them over and over and over again. And what it does is it gives you a snapshot of a memory that once you look at it again, and with annotations on it, saying, this is the sell side liquidity you're looking for, not just a blank chart at that level. Like, you have to dress the chart up. That way it records the moment of what it is that you were expecting to see in price. And that little tiny photograph is like, to me, they're in many ways, they're like pictures of my children. When I have my algorithm constantly giving me photo opportunities, I still do it. I may be out and about with my wife. I may be doing other things. If I see it on my phone, a screenshot it. Now, I know what I'm looking for, but you don't necessarily know what you're looking for because you're so new. So you want to spend time doing this a lot when price is going to go to our levels. When I'm specifically calling a level, I'm teaching you to predict a bias. Now, earlier today, when I sent out the tweet, I said, as long as we are beneath the 1040 fair value gap, if we're below that, then I'm going to be looking for the 4,000 and the 3,096.75 sell side liquidity pool. Notice I gave you very specific levels, not some random area or a zone. It's very specific levels. Now, we didn't get the levels delivered to during the day session. We had to wait for the 6 o'clock restart when the futures market takes the hour off from 5 to 6 o'clock every day. But it opened up, immediately just melted. So admittedly, I don't like to hold over during that break because anything can happen. I mean, they could drop bombs somewhere, something, anything can happen. And that's what makes me love more than anything now that I am a proficient day trader and not being willing to hold overnight. I don't want to do those types of things anymore. It's too much risk. The gap risk in doing that, there's no way of measuring it. Like, it could do crazy things. And if you're trading and holding size, an unfavorable opening could undo you quickly. And it's not something you want to really invite that level of risk on. And I want to mention something for folks that are wanting to focus on things that are outside day trading. Now, the things I'm teaching you in day trading is the same thing that you can apply to a daily chart in a 4-hour. So while it's not conducive for those types of trades right now, and that's how we're going to close the video, or not the video, but the discussion here tonight about where we are and why I'm taking tomorrow morning off. The present state of the marketplace right now doesn't permit me to feel confident about trading even short term, which is kind of like, that was kind of like my forte. Short term trading, one shot, one kill, get in, hold it for a couple of days, and then try to get the lion's portion of the weekly range. I have shifted away from that over the last 2.5, 3 years. I've moved and migrated away from that to adapt to the increased risk that's in the marketplace right now.